So this is Dale Elenteny. He's one of our preferred lenders over at Real People Realty. He's from Cross Country Mortgage. And Dale's going to talk a little bit about the pre-approval, pre-qualification part of what we do to get buyers ready to go. So Dale, take it away.
Thank you, Jim. The difference between a pre-qualification and a pre-approval. A pre-qualification is a loan officer's best assessment or estimate on whether you as a borrower or borrowers can qualify for a mortgage. But it is not a commitment to lend, meaning it has not been endorsed by an underwriter. A pre-qualification, a pre-approval, which I highly recommend, is an actual endorsement by an underwriter. And we issue what's called a credit certificate after an underwriter reviews your file, meaning your credit, your income, your assets, your ability to repay the loan and come up with the down payment. I think as a buyer, as I've told Jim, it's in your best interest to do these things up front. It doesn't take much extra time to get the assurance that you are on solid ground as far as an approval to go out there and purchase a property in that price range that you've been approved for. Oftentimes we've seen in this industry where people thought they were approved for a certain dollar amount only to find out later that's not the case, and then you get your heart set on a property and just creates a lot of frustration, anger, and we don't want that. We want to ensure a pleasant experience. So I am more than happy here, Dale at Cross Country Mortgage, to review your income, your credit, and your assets up front, run it through underwriting, get you a credit and income certificate so you can go out looking for properties with confidence.
So if I were to send you a buyer, which I always try to do, I send them to people that I know and trust, and I do that with you. What is the first thing that you're going to ask them to do?
The first thing I'm going to do is get on the phone with them and ask them a series of questions before I do anything. Things like, have you had a previous bankruptcy? Have you had a foreclosure? Are you currently renting? Can you verify your rent with canceled checks? Or can you verify it, are you paying to a management company? One of the big things an underwriter looks for a first-time home buyer is if you do have a verifiable rent history, what's the difference in your rent versus the new mortgage? And if it's close, meaning if you're going from an $800 rent payment to a $900 mortgage payment, that's called payment shock, but that's limited payment shock, and that works in your favor. So whenever you can verify your rent history, regardless of what your score is, that's going to strengthen your file.
Okay, so are these people qualified after you do that, or are there a couple other small steps?
The next step I would do is after seeing that it would be make sense to pull credit, we would pull their credit. If they have at least a minimum score of 580, because we go down to 580 on FHA and VA, 620 for conventional, then we would pull credit, and if the credit looks good, then the next step is I would request their last 2 years W-2s, their last 2 years tax returns, their last 3 or 4 pay stubs, depending on how they're paid, whether it's weekly or bi-weekly, and their last 2 months bank statements to verify whether they have the capacity to put a down payment down.
Okay, and all this takes about how long do you think?
Depending on how quick the prospect can get me the information back, it could be 24 hours. As far as me getting it in my hands, completing an application, and then what we do is if we're ready to submit it to an underwriter, then it's about 48 to 72 hours for a response. So all in all, if we do this on a Monday, we can have an answer by Friday, going into the weekend.
Right. So for me to take people out to see houses, you can have an answer back in about 24 hours as long as they do what they need to do, and the full process can be done in as little as a week, right?
Correct. They can be going out to look for houses with a credit certificate in hand. They're assured, they're confident on what they're looking at that they can be approved for, that they have been approved for that dollar amount.
Oh, great. Okay. And so the bottom line is, one way or another, if they're looking for a house, they're going to have to do all this stuff differently, or they'll have to do this anyhow. It's just a matter that you guys get it all done up front, correct?
Right. And exactly. They're going to have to do this eventually. So this is a proactive approach, measure twice, cut once. And, exactly. If they go get a contract first, they're going to have to do this later. The difference is they've got the assurance they know they're approved for that dollar amount that within that purchase range.
All right, great. Well, thanks for your time. I appreciate it. If you guys have any questions about anything that Dale's talked about, give me a call. He's with Cross Country. As I mentioned, he's one of our preferred lenders at Real People Realty, and we'll be talking to you soon again. Thank you.
Thank you.